Hello and welcome back to the Volunteer Income Tax Training Series. My name is Chris Moon. I am an Associate Teaching Professor at Iowa State University in the Ivy College of Business. And this video is going to focus on itemized deductions. We occasionally see this at the tax clinic, but because the income limit is so low, most people don't have sufficient expenses to be able to itemize, but let's talk through them just in the event that you may have a client who does have sufficient expenses. So we're going to determine if a taxpayer should itemize deductions and what types of expenses will qualify, and then showing how to report those on Schedule A and explaining the record-keeping requirements to the client for claiming charitable contribution. All right, so a taxpayer should itemize if their total allowable deductions are higher than the standard amount. For someone who is married filing jointly, they would have to have over $30,000 in itemized expenses, and it's pretty uncommon with income of $67,000 to have $30,000 in itemized expenses. So we're probably not going to see this. There are circumstances, however, where we will, because sometimes we have clients who have low income coming in, but they have a high amount of assets. And so they have the ability to pay expenses, but they don't necessarily have the income coming in to pay that. It's just coming from assets. So that's why we want to go over this, just in case we run into a situation where we see that. If the taxpayer has a large amount of medical and dental expenses, those can be listed on Schedule A as an itemized deduction. It is subject to a 7.5% floor of their adjusted gross income. So the first 7.5% of their adjusted gross income is disqualified for medical and dental expenses, but then the rest would be deductible. So if we see a client who is maybe has a lot of assets, doesn't have a lot of income, but runs into a ton of medical and dental expenses, we may be able to help them by doing itemized deductions. If you look at the taxpayer's information at the beginning of the session and you see that they're going to have substantial itemized deductions, then go ahead and enter those, and TaxSlayer is automatically going to give you the higher of itemized or standard. Throughout these training videos, I have consistently said if it's obvious that their itemized expenses are far below the standard deduction, there's no sense in taking the time to put those in. There's no sense in making the client sit there to put in itemized expenses that only total $5,000 when you know that that's not going to be more than the standard deduction. But if it's close or you know that it's going to be more, go ahead and put those in. I will say one situation that I have seen that is difficult is nursing home expenses. Nursing home expenses are generally not medical expenses. There is a very, very limited exception to that. So if you have a client who is trying to claim nursing home expenses as medical, make sure you double check the rule on that and only include those expenses on the return that the IRS publication and the rules say are definitely medical expenses. All right, taxes that may be deductible. So if you have a client who's itemizing, you want to ask them about state and local income taxes that they've paid, sales tax that they've paid, real estate taxes, and any other taxes that they've paid. Publication 47 is going to help you out with what taxes you can deduct. The most common that we see are the state and local income taxes and real estate taxes. Also included on that might be your car tags, things like that can be included as deductible expenses. So if you are itemizing deductions, make sure you ask for all the information about the things like that the client has paid. Interest is deductible as an itemized expense. Mortgage interest, and there are rules on the amount of your home loan and how much of that interest is deductible, but in all likelihood, the clients that we are going to see in the VITA program are not going to have mortgages in excess of what those limits are. So if they are able to itemize, then their mortgage interest will be deductible. If they paid points as a form of interest when they were getting their loans, that is deductible. Other points are not. Investment interest is deductible but is out of scope. So if they have investment interest, we have got to send them away to a paid preparer. All right, if you have someone who is itemizing deductions, ask them about their gifts and donations to charity. There's a list, there's a link right here to check if the organization is a qualified organization. I will say one of the things that we have run into from time to time at our clinic is taxpayers who have donated to charitable organizations that are not United States charitable organizations. So I'm sure these organizations are doing great work and are definitely charitable organizations, but make sure that you are double checking that the organization is qualified and is a U.S. exempt organization, not outside of the country. If the taxpayer has donated to charity, they need to make sure they keep receipts or records of those contributions. So it could be that they have a copy of a check that they wrote to a charitable organization, or the charitable organization gave them a receipt. So if they donate clothes to the Salvation Army generally gives them a receipt that says they donated a bag of clothes. As just part of good practice, when I do charitable donations, I itemize everything I'm giving to the organization, and I advise clients to write down everything they're donating so that we can go through and try to value those items one at a time, or they can do it hopefully before they get to us, and we can put that donation amount in. But making sure that you keep that receipt from the charitable organization that shows 1 bag of clothes, 2 boxes of house goods, or whatever it was, so that in the event that they get audited, they have that receipt and they have the documentation to show the agent. Miscellaneous itemized deductions include gambling losses and work-related expenses for disabled individuals. Just please note that all itemized deductions subject to that 2% AGI limit are not allowed through the end of 2025. That was part of the Tax Cuts and Jobs Act. That includes employee business expenses. So we'll see what happens in 2026, but you can refer to publication 17 for additional miscellaneous deductions. Again, the 4012 is your best friend. Tab F talks about deductions in your 4012, so you can review that for more information. This page talks about all of the items that are out of scope for this lesson. One other item, the gambling losses, just know that at this moment, gambling losses are only allowed up to the gains, so they can't take in excess of that. I forgot to mention that earlier. All right, so we talked about the deductible items for Schedule A. If you are itemizing deductions, just know it's pretty uncommon to see at VITA clinics, but we do see it. So if you have a client who is going to itemize, just make sure you are making sure you get all of the possible deductions, looking through the 4012, and I think it is tab F is what I just told you. So looking through tab Yep, tab F to make sure that you've got all of the possible itemized deductions if the client chooses to do it that way. All right, thank you.